I'm Deepesh Patel, editor at Trade Finance Global, and today we're at the ITFA 49th Annual Trade and Forfaiting Conference held in Abu Dhabi. Africa has been a key topic for discussion at the conference, and I'm delighted to be joined by Gwen Mwaba from Afreximbank. Gwen, welcome.
Thank you very much, Deepesh, and thank you also for having me.
Thank you, and I'm sure you need no introduction, as our readers are very familiar with you, but can you just quickly explain what you do at Afreximbank, where you're based, etc.?
Yeah, absolutely. So my name is Gwen Mwaba, as you've very ably introduced, and I'm the Director and Global Head for Trade Finance at the African Export and Import Bank, or Afreximbank as it's popularly known. Afreximbank is an Africa-focused development finance institution where we provide credit solutions to sovereigns, sub-sovereigns, central banks, corporates and financial institutions.
Thank you very much, and I think it's fair to say the African trade finance landscape is going through a total makeover, and it has been for the past 2 to 3 years. I guess in your position at Afreximbank, what are the most pressing challenges right now?
So I think right now I would say there's 2 or 3 main pressing challenges. The first one, which is a usual recurrence, is every time there's any form of crisis, we see major de-risking by international banks. And what that does is it leaves an even bigger gap when it comes to financing for the African continent. De-risking in the form of banks scaling back their liquidity to Africa, scaling back their confirmation capacity to Africa. So Afreximbank has positioned itself as the trade finance bank for the African continent. So in addition to ramping up our lending to African sovereigns, financial institutions and corporates, we are also providing letters of credit confirmation capacity because Africa is still a net importer of most goods and services. So those LCs are very, very much required. The other pressing challenge that we observe from an Afreximbank perspective is the increasing debt levels by African sovereigns, and this is putting a lot of pressure on African economies, particularly when it comes to the availability of foreign exchange, because the same foreign exchange that the African governments are using for debt service, external debt service, is also required by the market to facilitate imports. So I would say those are the 2 key challenges, but of course we can't forget the times that we live in. If I add on a third, if I may, we lived through the COVID-19 pandemic, and in close succession we then saw what is going on with the Russia and Ukraine situation, which for us is a concern from a food security perspective. That's putting a lot of pressure on our countries in terms of the cost that the increase in cost when it comes to the cost of fertilizers, grains that the African continent needs, but also the inability for the countries to actually have the foreign exchange to pay for the imports that they need. But then the war in Russia and Ukraine in particular is of interest because the majority of imports of grains and fertilizer for Africa are coming from that region. Can I go on and expand to a fourth? Because the 4th key impact that we're seeing on the African continent is climate change and the impact of climate change. So even though we all know, we've read, studies have shown that Africa is a very low contributor to carbon emissions, however, the impact of climate change globally, Africa is suffering the greatest impact of that climate change. I think I read a statistic somewhere that out of the 10 countries globally that are most impacted by climate change, 7 of those countries are in Africa. So it's the droughts, it's the flooding. So again, it takes you back to the conversation around food security. If you have drought, the majority of Africa's agriculture is still rain-fed. So that's a challenge.
Yeah, well, actually, my next question is in relation to that, because obviously the IPCC reports hardly mention trade, let alone trade finance. Yet trade and trade finance are inextricably linked to climate change as a big contributor to carbon emissions, of course. What can DFIs like Afreximbank and other multilaterals do to combat and reduce some of those pieces to actually address the climate crisis that we have right now?
Yeah, really good question. And from an Afreximbank perspective, we appreciate and understand that whilst we need to transition through all the new ESG requirements that are coming in place, and we're supporting more green energy projects, trying to finance wind farms, more hydroelectricity, etc. We also need to look at climate adaptability so that the African countries that are most impacted by climate change can actually overcome that challenge. So things like financing dams would be very topical for us, because that will counter situations like droughts. Supporting mega farming projects, which are highly mechanized, where the majority of the land is under irrigation rather than depending on rain-fed crops, for example. Increasing the financing of fertilizer production on the African continent so that more fertilizer can be produced and used on the African continent, minimizing the dependence on imports, which is a situation that we currently face at the moment.
This is really interesting. So I don't know if you know, my dissertation was actually on the crop adaptation to climate change.
That's
a very long time ago. And actually, adapting to what is happening is probably of key priority. I'm going to try and turn this into a question now. Mm-hmm. When you look at the trade financing element of that, often when you have these new projects, there are new suppliers, there are unknown entities, you've got to onboard new people. How can you incentivize, corporates, sovereigns, other FIs, etc., to actually go about and pursue these different programs? Because there's a longer term, financing view, there's a longer term view that project will be more sustainable and therefore economically beneficial in the long term. And what can Afrexim play in that?
Yeah, I think the convincing part is the easier part, because I don't think African entrepreneurs need convincing. I think they know where the opportunities lie. The challenge is always access to finance. So if they understand that there is a party that is able to take the risk on them and provide that financing, then I think, the Afreximbank obviously stands behind those types of projects. So perhaps there's a piece on education and awareness to make entrepreneurs understand that they are Africa-focused DFIs, not just Afreximbank. There are a few others on the continent that actually would support those types of projects, because I think the financing is the biggest impediment to getting some of these projects off the ground. And Afreximbank has also recognized that in addition to having the financing for the project, some project promoters don't necessarily have the startup capital to even fund feasibility studies. So we have a project preparation unit, for example, where a project promoter can borrow, or I don't want to call it a grant, because at some point it does have to be paid back, but they can access funding to fund the feasibility study. If that feasibility study is successful, that then gets bundled into the longer term financing that is lent to the project for the project to actually crystallize.
Yeah, absolutely. I guess also trade facilitation is incredibly important. 54 trading nations. How do you get them to act more cohesively and do promote intra-African trade? Are there any specific policies or regulations domestically and regionally that can really continue to grow, growth within the continent?
So I'll answer that question generally from an Africa perspective, because of the AFCFTA implementation, which is intended to harmonize trade policies across the continent. So that's one area. But in addition to that, there are some countries that are hesitant because of the perceived loss of revenue that they will suffer because of that harmonization of standard and even doing away of some tariffs which they are currently enjoying. So Afreximbank has created an AFCFTA adjustment fund, which can help compensate or cushion the initial loss of revenue, because at some point there will be equilibrium when the volumes of trade increase, but in the initial stages, those countries that are earning tariffs from importation from other African countries would suffer. So that adjustment fund is intended to kind of, moderate that impact.
No, that's really interesting. But actually, the stats are pretty good, right? According to the African Trade Report launched earlier this summer, there was impressive growth across the continent. 3.9% plus GDP, 20.9% merchandise trade expansion, and versus the global average of 12%. What are some of the major catalysts to growth within the region, and how can the continent continue on this very exciting trajectory?
I think one thing is COVID taught us a lot, and that lesson that we learned from COVID is that we need to look inwards for our own solutions. So when Africa was kind of closed off from the rest of the world, when supply chains were broken, when we didn't have access to vaccines, people started to produce more goods on the African continent. People started to retool factories to adapt them to produce some of those goods that previously it was easier to import. So that's one key driver to the growth. The second, I would say, is the fact that we've seen Africa, if you look at global statistics, Africa has a very youthful population. So many of these youth are not interested in jobs for life, working for somebody else. They're very entrepreneurial. If you look at the millennials, the Gen Zs, they all want to be their own boss. So they are accelerating entrepreneurship through the businesses that they themselves are creating. So I think that's another big growth driver.
That was Gwen Mwaba, Head of Trade Finance at Afreximbank, talking to Trade Finance Talks at ITFA Abu Dhabi. Gwen, thank you very much for joining us.
Thank you so much, Deepesh, and it's my pleasure to have been here.